Hello everyone, this is 1973 Hog. Thanks for viewing the video. I'm going to go over a short that I took on the Russell today on Friday the 13th in 2018. Video will start in just 1 second. Here we go. We saw we'd had a pretty good move up during the day in the morning, and so around lunchtime I was figuring that we're going to get a pullback at some point. I was going to try to find a good opportunity to short. Now, one of the things we're looking for is we're looking for a move down, a rebound off of that move down, and then try to short. And what you're going to want this, and what you'll see here is that we penetrated our moving averages, which are used to help visualize the trend, and now we can see that there is a trend change. You're seeing the two momentum oscillators at the bottom, letting me know that it's starting to fade a little bit. You can see that with price, and it's breaking through a swing level, the three dark green dots, and the volatility stop, which is the light green dots. Now, this is starting to get our attention, and we're starting to plan it. And the red line down there are about 16,995 is a resistance level which we're going to have to penetrate, and I'm expecting to get a bounce somewhere around there. I would like to see a cross down in the moving averages. So the faster one is called the signal line. It's at the top right now, and the other is the 20 period simple moving average, and I want to see that curl down and and be crossed by that signal line. So price is moving down, moving to a prior level off to the left around 11:15. These are all Eastern times, and we expect a reaction, and sure enough, we're getting it. So we're tracking along here, just trying to be patient. That's the key that for us is to be patient and let the setup develop. We want to have the momentum oscillator and the trend both going down, but from the blue going to a red or towards the oversold condition. So we're waiting for that. A little premature for us to try to jump in here. A lot of people get very anxious and jump in too quickly. And I'm going to show you how I like to do it. And I'm not saying it's the only way or the right way, but it's the way that I prefer to do it. And so far it's been working. All right, we're starting to get a little weaker. We're attacking that low again. And we're going to see what happens when we get to that low. That's R1 in the trader pivot. And we're getting a reaction there as it is bouncing up and down. And I'm using Unirenko chart. I use Renko charts. They're not time-based at all. They're based on basically price movement. In this case, T4, which is the 4 movement with an overlap of 2 and reversals of 8. So the Renko, the normal Renko does not have wicks. The Unirenko does, and I like that to know where price has been. It doesn't disguise where the price has been. So we're going to be going down towards the R1 here in a moment. But I wanted to show you the setup. The blue dots and red dots at the top are swing levels, and the red dots are called exhaustion dots, but they're basically swing highs or swing lows. In this case, a high plus 2 ticks. All right, we're starting to move down now. We've gone through getting closer to R1. We've gone through the 20 simple moving average already. And let's see, We're getting the top oscillator, I call it the momentum oscillator, is going down, and the R squeeze oscillator now is also pointing down. It usually leads the momentum oscillator. Okay, so there we go. We're going down closer to the R1. We're getting there. We expect a reaction off of R1. We expect a bounce. Not going to get excited when it actually happens. And a lot of times it'll go through there, and it will then bounce. And what I'm looking for is I'm looking for the crossover to happen, and is to transition from an uptrend to a downtrend. If you notice now the candles turn red, that's a down candle. Down candles in an uptrend are in the khaki mode, the tanny, yellowish color. So we're getting here, and we also have price support over here to the left, so we have to be concerned with that as well. And a lot of people will say, "Oh, I've got to go short here. I've got to go short here because I'm missing, the fear of missing out." Well, if you jump in a little bit too late, watch what happens. You jump in too early because you're afraid that you've missed it. Okay, it's going to bounce here a little bit and go up to approximately 16.99. So watch what happens when we anticipated this. We anticipated a breakthrough the R1. That's the fake out breakout that happens the vast majority of the time. Because what happens is they want to suck people into either to longs or shorts and then take out the weak hands. So we're going to get a reaction. It's going to go back up to around 16.99, and then we'll see what happens from there. Notice that the momentum oscillator, the one on the top, is pointing down solidly now, and the R squeeze indicator is now below the 0 line, and they've turned red. Okay, and we'll get the bounce shortly. This is recorded in real time. Even though I'm voicing over afterwards, it's recorded in real time. So we're not cherry picking. I will show the entries and the exits and critique it and how I could have possibly done a little better. Okay, so we're waiting on the bounce. It's not time based, so this thing can take a long time. It's not a number of trades either, so it's not tick based. It's based upon price movement. And I'm a big proponent of that. The big advantage of the Renko chart is that you can see trend, and you can see this trend right now. Now, do you see those orange or gold dots that we're approaching? That's a prior swing level. The bottom of the support off to the left. We're going to get a reaction off of that one. We're going to get the bounce, and that's where we're going to get the bounce, and it's going to bounce up. So this is the bounce where we're expecting, and I was expecting it a little bit sooner than that, but that's okay. In fact, that's actually better that it got down that low, because now when it breaks through there, I know it'll go down to the next level, which is the mid level for the 5-minute opening range, and that mid level is approximately 1698 or so. No, 1696. Okay, here's our bounce, and we're getting the bounce here in this and right in here is where I have to tell myself, if it gets back above R1, that's going to be too big a bounce, and it will change the trend direction from down to up. Even though it hadn't crossed and made a full trend, it'll be the direction of the signal line. That blue dashed line that you see there is the signal line. It's a 9-period moving average. So on that one, we were trying to say, you know what, we hope that this thing does not curl up too far, and we're getting really close to that 1699 level in the R1. And we have the momentum oscillator just crossed over to the red, and the R squeeze is already solidly in the red. And we have to look at it and say, if this thing doesn't roll over right now, what'll happen is it'll use up all of its energy just to get to the next swing level down. The next swing level being around 1697. If it gets to 1697, if we use up all our energy, it'll bounce on us, and we'll, one, not be able to go short, or if we do go short, not get any follow through. Now we're starting to get the curl down, and now I'm saying, okay, where am I going to put my stop if it gets down there? Am I going to put it right at those orange dots, or we're going to put it a little higher than that? So the whole idea is we have to figure out where we're going to place our buy stop. Okay. So we're watching in here, and I'm going to put it, now you see the 3 green dots appear, and I'm going to be putting my stop just below that, the buy stop. And now there it is. It's a tick or two below. I don't like round numbers. I did pick it out as a round number before I could actually change it. We got filled. Now I've got the move down, the counter direction, and now the move even further down, and we're going to get filled in a second. The momentum oscillator and the R squeeze are okay. I would have preferred them to be a little higher, but they didn't occur that way. We don't always get what we want. So they're not always the ideal situation, but they're what we have. Okay. And we have, at this point in time, we're forming a little doji there, and I went, maybe it's not going to come down and get us, and that'll be okay. But watch what happens when we actually get through that level. Usually when you get to logical breakouts or breakdown areas, you'll see a flurry of activity. And I'm trying to trade very conservatively. It's Friday. Fridays are not necessarily the best of trades, but I suspect that when this thing breaks, it's gonna go very quickly, and then we can get out with our target. Now the idea was only to try to take about 15 to 20 ticks. So 1.5 or something like that. So we've got 1697. And one of the reasons why it's not going to be a big follow through to the downside, I believe, is because over to the left, I'm seeing lots and lots of support. So all I'm really trying to do is, when the market gives me lemons, I'm going to make lemonade. So we're getting a little bounce reaction, getting close to that prior swing low, but it's not breaking above the prior 2 candles. So I'm not all that concerned about that. But what I want to do is I would like to see a breakdown here. I do not want it to go sideways or up. If it goes up above those, I will cancel the trade. All right. Sitting here waiting. If it comes down and tags us before we get up too high, then so be it. If not, that's okay. We can deal with it.
Order filled.
There we go.
Order filled.
I don't think I have enough. There we go. We're short. And let's see, we should get some movement very quickly. My target was automatically set at 1694.5, but I'm going to probably take it on the bounce here. I lowered my stop, and I went ahead and took it when I got to 20 ticks. We had a trade of about 15 to 20 seconds. We got that movement. I'll let it go a little bit and I'll show you what happens is we get a reaction off that midline and the swing level to the left. All right. Thanks for joining us. You have a great weekend. Take care. Bye-bye.